Wall Street snaps a three-day gaining streak as hotter than expected February producer price index report spooks investors. Asian markets trade with losses while the gift nifty also indicates a lower start for the Indian market. OMC's cut petrol and diesel prices by 2 rupees a litre even as crude prices rise. Prices of CNG and LPG are also cut. Sources tell CNBC TV 18 that the industry had headroom for price reductions. Crude too continues to rally with Brent now trading at $85 a barrel. The National Payments Corporation approves a third-party application provider license to Paytm ahead of the RBI's March 15th deadline. The license will allow UPI transactions to continue on the Paytm app. And mutual funds start releasing results of SEBI's stress test with industry-wide disclosures likely to come in by the end of the day. Remember, the results will indicate the days needed to liquidate 25% and 50% of portfolios in a predefined stress situation. The Election Commission releases SBI's submissions on electoral bonds with Future Gaming and Hotel Services PR emerging as the top donors with 1,208 crore rupees donated. Other donors include Megha Engineering, Vedanta, Bharti Airtel, DLF and JSPL among many others. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Friday morning. There's a lot to get through, but as far as the global markets go, the handover has not been the best. We do have most of the Asian markets, actually all of the Asian markets, which are trading with cuts this morning. And what's really leading the decline is the Hong Kong index. So the Seng is now down almost 200 points. It's 1.2%. which is gone on that one. I do want to point out that for the week, it's, this is still an index which has rallied very hard. It's up over 3% for the week, but today it's definitely seeing some amount of pullback coming through. The Taiwanese index also down around 0.5%. You have Nikkei, which is seeing quite a big cut as well. So that index is down around 90 points. In fact, that's been one of the worst performers this week, at least. It's down around 2.5%. Across the board, whichever Asian market you look at, it's definitely coming in for some losses. What's holding relatively better is the Shanghai market and the Straits as well. So that's the shape across Asia. The gift nifty will be up on your screen. There you have it. It is definitely going to be a bit of a weakish start for our own markets. 114 points lower is where we're at for our own markets. So maybe we open just above that 22,000 mark as far as our own markets go. But that's what's happening across Asia. Let's also talk about the US now, because Wall Street, like I mentioned, ended Thursday's trading session lower following a hotter than expected inflation report. So the Dow closed nearly 140 points in the red. You had the S&P 500, which slipped around 0.3% as well. And if you look at the tech-heavy Nasdaq index, that was also down around 0.3%, like you can see on your screen. We have CNBC's Kate Rogers, who's here to get us a wrap of all of the action that really played out on Wall Street. Kate.
U.S. markets were down across the major indices Thursday after another hotter than expected inflation report drove Treasury yields higher. The Dow dropped 138, the S&P 500 lost 15, and the tech-heavy Nasdaq fell by 49. Wholesale inflation ticked up 0.6% in February. That's far more than the expected 0.3%. The producer price index, which measures the cost for raw, intermediate, and finished goods, also 1.6% year-over-year increase, the biggest move since last September. Two-thirds of the rise came from a surge in the cost of goods, such as gasoline and food. The PPI is considered a leading indicator for inflation as it tracks costs early in the supply chain. And former Treasury Secretary Steve Mnuchin is putting together an investor group to buy TikTok from ByteDance. Mnuchin told CNBC Thursday that TikTok should be owned by U.S. interests and that China would never let the U.S. own a company like TikTok there. There is a connection already between Mnuchin's Liberty Strategic Capital and ByteDance. Masa Son's SoftBank Vision Fund is a ByteDance investor and a limited partner in Mnuchin's firm. The bill to force divestiture passed the House and is now headed to the Senate, where its future is uncertain. But President Biden has said he will sign it into law if it passes. That's what's happening here in the U.S. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of that action from the U.S. markets. But staying with the U.S., let's also bring you some expert opinion on what they think of the market going forward. And of course, the big question, when will the Fed begin to cut rates? Listen in.
It's not that we're bearish. We just think on a near-term basis that the market is ahead of itself, that everyone's kind of chasing the same stocks. In this herd mentality, traditionally is not a good time to be buying stocks and adding to positions, but we're still bullish longer term. Every time the 10-year ticks noticeably above 4%, the market sells off, and we think that there's some risk that the Fed does not do anything. And oh, by the way, that's not risk. That's actually okay. We actually said this in our report, too, in November, saying, wouldn't it be cool if the Fed doesn't do anything? And what if the Fed does nothing? And I think that there's a very good chance the Fed stays pat all year long, and I think that could surprise a lot of investors.
I think that's certainly one of the biggest risks, particularly for areas of the market that are more rate sensitive. Small and mid caps still have about 40% of their debt that's short term or floating rate. So I think if our house expectations are correct and we start to see rate cuts this year beginning in June, which is our economist expectation, we still think it's a supportive backdrop. But if inflation stays very elevated or goes higher and those rate cuts get taken out, that certainly becomes a riskier backdrop for some of the parts of the market that are more sensitive.
All right, that is some important opinion coming in on where the U.S. markets could really move from here. But let's also bring in the final update in our global market wrap this morning. European equities actually eased from record levels on Thursday. So the French CAC, actually, that was the outperformer. It gained around 24 points. But the German DAX was down 19 points. The British FTSE also closed with cuts of around 30 points. Now, what really dragged equities in the region were bond yields because they saw quite a rise after the US PPI data did come through. So the German 10-year hit its highest level that we've seen all the way since the 1st of March. You had the ECB chief economist Philip Lane, who was one of the most influential voices in the governing council, and he indicated to CNBC that a rate cut could come in by June, but he did warn about predicting what will really happen after that. So that is some important data and some important voices to really track from the region, and that's what we're looking at globally this morning. But let's now talk about how all of these overnight cues really impact our own markets and everything that you should track from an India market standpoint as well. We have Sudarshan joining us now, Vamakshi and Nigel also in just a bit. Guys, a very good morning to both of you. Let me come to you first, Sudarshan. We were just going through the global setup, which definitely doesn't look the best this morning. But take us through everything that we should track, because there are a lot of important domestic cues too.
Morning, Pavitra. So we had a sharp recovery yesterday in our market, but we'll have to see if we manage to sustain it, as there are several cues that will have to be factored in today, both on domestic and global fronts. So now let me first talk about the global markets. US equities saw a close with minor cuts. All the three major indices were down 0.3% each, and this after wholesale inflation for the month of February came in higher than expectations at 0.6%, and this led to a rise in US 10-year yield to 4.3%. Another important cue that will be in focus is crude, which has extended gains, and Brent is now at $85 per barrel. Factoring all this, GIFT Nifty is indicating a gap down start. Currently, it's down more than 100 points. Now, coming to our market, for our market on Thursday, it was a sharp recovery, especially in broader markets. Mid-cap index gained 2%, regaining 50% of the losses of Wednesday, and small-cap index was up 4%, regaining almost all the losses of Wednesday, and similar kind of move was seen in other sectoral indices too. BSE SME was up 2%, and CPSE was up 2% as well. Benchmark indices too saw a recovery, but it relatively underperformed mid-caps and small-caps. Nifty was up nearly 1%, with support coming in from IT major Infosys. Even Adani Group stocks were amongst top contributors, and the group has regained all the market cap losses that it incurred on Wednesday. On institutional activities, the flow suggests there were no major activities. FIs sold shares of little more than rupees 1,350 crore, and DIs bought shares worth rupees 140 crore. Lastly, the cues to watch: we'll have to see impact of MF stress test. Mutual fund houses have released first set of stress test results. We have India February trade data. Trade deficit is estimated $18 billion against $20 billion in January. SEBI board meet is scheduled today. The regulator is likely to discuss ease of doing business for FPIs, AIFs and PMS, and T+0 settlement might be discussed as well. Keep an eye on HDFC Bank on the back of FTSE inflows. And lastly, keep an eye on oil marketing companies, as these companies have announced a price cut for both petrol and diesel by rupees 2 per litre each, and this has come at a time when crude is at a 5-month high.
All right, so it's definitely going to be a packed day, as we come to a close on this week. So Darshan, thanks a lot for taking us through all of those cues. Let's also bring Vamakshi in because she's looking at all of the stocks that we should track. Vamakshi will definitely watch the oil companies because, like Sudarshan was mentioning on the back of the news flow that came through, but take us through everything else.
Well, absolutely, Pavitra. Let's first start off with Paytm. It is a CNBC TV18 news break confirmed. The company has announced that they have been granted an approval to participate in UPI as a third-party application provider. In fact, NPCI says that 4 banks, including Axis Bank, Yes Bank, SBI, and HDFC Bank, will be acting as payment system providers, while Yes Bank will also be acting as a merchant acquiring bank for existing and new UPI merchants for Paytm. Eris Life Sciences is the next one in focus. Along with acquisition of Biocon Biologics formulation business, they've also announced that they will be acquiring nearly 19.5% stake in Swiss parenterals for almost 237.5 crores. There are a couple of stocks that will also be in focus on the back of some order wins that came through from Gujarat Urja Vikas Nigam. Integrate gets an order worth almost 97 crores. This is for setting up battery energy storage systems. KPI Green has bagged an order worth almost 50 megawatts for a wind solar hybrid power project. NHPC has received an LOI for 200 megawatt capacity solar power project, which is almost worth 847 crores, while JSW Energy has received an LOI for almost 300 megawatts of solar power capacity. Ashok Leyland, watch out for this one because Creador is expected to invest nearly $50 million for 19.5% stake in Hinduja Tech, which is a wholly owned subsidiary of the company. Navin Fluorine will be investing additional 250 crore in its arm, Navin Fluorine Advanced Sciences Limited, while NCC, the arm, has reached a settlement with Taka India Power. They will be paying them 175 crores in 3 installments. They had in fact provided for nearly 140 crores in its book earlier. Shakti Pumps has gotten an order worth 93 crores from Maharashtra Energy Department Agency. And lastly, RailTel has received a work order worth almost 114 crores.
All right, thanks a lot, Vamakshi, for filling us in with all of that stock-specific action. We're going to watch for all of these in today's trading session. But finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. The troika that you all were talking about, whether it was the 10-year bond yields, Brent crude prices, or the dollar index, they have moved actually not in the manner that equity markets would like them to move, because all three of them are stronger overnight, which normally is not a great sign for an emerging market like India. So that's about the global setup. Yesterday, we had a great rally, though. What did the FIs do? Well, in the futures market, that's on the index futures, they added close to 11,000 contracts. And that's the second day running, they're adding close to 11,000 contracts. In terms of a ratio, they added close to 2 shorts for every 1 long position that they added. And that's why in the last 2 sessions, because this kind of short addition that we've seen, the short positioning has moved to around 50,000 contracts. Remember, a few days ago, it was at around 30,000 contracts. That's moved to around 50,000 contracts. As I always say, shorts in the system, not a bad thing. You want them to get added and then hope for some glimmer of good news, which causes a bit of a short covering bounce. The big call that I made yesterday was, I'm expecting the market to rebound from the intraday low. And the key reason was the PCR had come down to the lower end of the band of around 0.65. The reason is that yesterday, in fact, we did see that there was a lot of put writing yet again. So the PCR from 0.65 has gone to around 1.1. When it's at 0.63 odd, we normally see a bit of a bounce. And yesterday, they added around the 22,200 call as well as put. There was a fair bit of action. So if there is writing at both those 2 strikes, and if there is a short straddle going on out there, then you're bracing for that broad 450, 500 point range odd. So let's get to the levels. In the near term, well, you have yesterday's high and low as a reference point. And this high and low, if you pull up the chart, it perfectly ties in with the 20 as well as the 50 DMA on the Nifty itself. Yeah, pat in the middle is where the Nifty is. The Nifty Bank's reference levels as well come up for you in the screen. So we start off in the red. On a closing basis, you don't want to break the 50 DMA both on the Nifty and the Nifty Bank. So that's about trade setup. But Pavitra, it's your last power breakfast here on CNBC TV18. It's been a pleasure working with you. Pleasure hosting the show with you and always being on your show. Wish you the best as always.
Thank you, Nigel. Power Breakfast was my first show and it was my first show with you. And for anyone starting out, it makes, the biggest difference who you're anchoring with. So thank you.
More power to you, Pavitra.
Thank you, Nigel. And I'm here for the rest of the day, so I'm sure you're going to, be around and remind me of it multiple times. But with that, we're going to get into a short break on the show. On the other side, like we were mentioning, the National Payments Corporation has approved a third-party application provider license to Paytm. We're going to bring you all of the details when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast. Now, the National Payments Corporation has approved a third-party app license to Paytm ahead of RBI's March 15 deadline. That's today. The license will allow customers to continue using the Paytm app for payments through UPI. So Ritu is here to take us through all of the details. Ritu.
Well, big relief coming in for Paytm ahead of that deadline later today for Paytm Payments Bank to wind down its banking activities. Now, with the NPCI granting Paytm the license to operate as a third-party application provider, which means its customers can continue to use the Paytm app to make UPI transactions thanks to this license. So a very crucial one that has come in just ahead of that March 15 deadline. As we had reported earlier, there are 4 banks that are going to come on board as payment system providers, and these are Axis Bank, Yes Bank, State Bank of India and HDFC Bank. In addition to this, Yes Bank will also be acting as the merchant acquiring bank for Paytm from here on for both existing and new UPI merchants, and the @Paytm handle will be redirected to Yes Bank. Now, what this essentially means, one, the very important news for Yes Bank, because almost 20% of Paytm's 4 crore odd merchants have bank accounts that are only linked to Paytm payment banks, and these will now be transferred to Yes Bank, and any new merchants that Paytm acquires will also have their bank accounts linked to Yes Bank. So Yes Bank will have the opportunity to cross-sell to all of these merchants and so on. So positive for Yes Bank. Apart from this, the 4 banks that are going to be acting as PSPs for Paytm for its UPI app will also get access to that float because of the settlement that they will do for these UPI transactions, the money that they'll get for one day, which they can invest to make more money, and of course, cross-sell more products to these merchants that they get and the customers that are using the app. So positive for the banks involved, but the big beneficiary, of course, coming out of the Paytm payment bank issue here is Yes Bank. That is the one to focus on. But that aside, the deadline ends today, and as per our sources, there's no further extension, there's no further relief that RBI is inclined to grant at this moment.
All right, Ritu, thanks a lot for filling us in with all of the details. With that, it is time for a break on the show. But on the other side, there's lots more that we're tracking. So stay tuned. We'll be back in 2. Welcome back. You're still tuned into Power Breakfast. Now, some important news. The Election Commission releases the electoral bonds data shared by the State Bank of India following the Supreme Court's directive. So the data includes details about the donors, their contributions, and the parties that redeem the donations as well. So State Bank of India unveiled to the Supreme Court that a total of 22,217 electoral bonds were purchased by political parties, of which 22,030 were redeemed. The highest amount of donation was made by a company called Future Gaming that donated 1,368 crore rupees between 2019 and then 2024. Hyderabad-based infrastructure company Megha Engineering is the second highest donor. So they put in 1,116 crores, which was donated. And some other well-known names in the bond buyer list are Vedanta, Bharti Airtel, DLF, just to name a few of them. So that is some important news that we're tracking as well. But with that, we're completely out of time on this edition of Power Breakfast. Thank you all for tuning in. We have Bazaar Morning Call on the other side.